Hey guys, it's August 3rd. Just doing some macro overview, so I just wanted to show you guys what's kind of going on beneath the market and why we're up and what looks a little suspicious. So, the main reason the market's been going up all of July, very simple. This is the XLK over SPY ratio. XLK is way outperforming the SPY. So what does that actually consist of? What does that mean? Very simple. Apple, Microsoft, Nvidia, and these other ones are doing decent, but these three are kicking ass. They are lifting the markets, period. No other way to put it. XLK, crushing it, lifting the market. Some of the biggest cap names in the whole index on the SPY. Number 2, SMH, right? Chips, semis, important area. Kind of the Dow theory of the year 2000 and on, right? It's not transports really anymore, it's the semis. So coming up to an important level. The speed of increase, not as big as the XLK, but you can see bottomed in July, going up. So semis, second sector, helping the market, heavily weighted. What do we see in transports? A traditional one that moves when the market's generally in good, healthy condition. Doesn't have to be a leader, but shouldn't be going down, right? I'm not saying it has to be at the top like XLK or SMH, but we shouldn't be descending like this and underperforming the SPY, right? Because that means this is going down, which means the XLKs, which is the Apple, Microsoft, Nvidias, SMH, it's all the chips. Those are doing the heavy lifting because this is bringing it down. So in a healthy market, this would at least be flat to, semi-neutral with the SPY. You wouldn't have this vicious downward movement. So something we got to watch out for, especially after this big increase we've had since July. I think we're coming pretty close to 10 to 12%. Michigan Sentiment Report. This report's been going on since 1953. It's never been lower. Hasn't been lower in COVID, right? There's your COVID level. Hasn't been lower in the last rate raising sequence around here. Hasn't been lower. It's lower than the financial crisis. The dot-com bubble, right? All the way over here. The big Volcker rate increases in 1979 to 1981. We're below that, so this is a crazy reading. We have to watch this. Wasn't something that people usually watch, but this is extreme. So another one we just got to keep an eye on. It's kind of giving us some of the underlyings of this market. What else? I'm going to do this one first. I did not watch the news tonight, but the yield curve inverted another 7 basis points. That's huge. We do 1, 2 a day. It inverted 7 more basis points today. If we get to 56, which at this rate could be 2 days, this was a big move. We were just here last week, 18, so 56 we done this week. If that happens, we're inverted to the 2002 dot-com bubble crash. We've already gone below the financial crisis. And if we go all the way back here, right, we're in that crazy rate raising during Volcker, right? That's 17% interest rates. I don't think we could physically do that now because the government won't be able to pay its debt, but it's getting something to watch. It's usually a lagging indicator of a recession, but I think this is more than just a recession you have to watch out for. We have some big macro issues here, so just kind of showing you some things we should be looking at, or I am looking at every day. Another thing, we know this guy's the dollar. Kind of teetered off, came down a little bit, gave us that little extra pop. I won't say it decreased in July, right? Increased in July, definitely, but this dollar has to get below 105. If this thing keeps going up, it's going to be going to 113 to 117. That is not going to help the stock market. So we got to keep an eye on that. And then one of the oldest, most macro things people look at is the copper gold ratio, which obviously, look, June is when we had that major tankage. Boom. So that's going down. That's not looking better. That means, right, copper is everything we use for infrastructure. So when we had some great movements to the upside, look, boom. It doesn't always spike like that. We had that commodities craze, but this is more normal. This is not. This means building everything. Copper goes into everything. It's slowing down. So just a quick 5-minute excerpt of what's going on. Macro definitely left a few things out. Just wanted to give you guys an overview. I'm going to try to do these a little more frequently. Rough draft, guys. Using this new recording program for the first time. I will be posting this right now. Let me know what you think. I will speak to you guys later. Remember, I won't be around tomorrow. Have to go to a funeral. I should be back around, or at least be able to hop on around, hopefully 2:30 to 4. All right, guys, have a good day trading. Watch that list that I put out with all the names. Actually, let's do that now also while we're on here. Why not? I got to find them, though. Give me 1 second. See, this is really rough. You're seeing my total. All right, let's take a look at Broadcom, just so you guys understand. All right, current pivot listed right here. I gave you all the levels. Now, we could open up at 42. We could open up at 39. If we open up, let's just say at 39, that's the new pivot. So above that, you want to be long. First target 42, second target 48, and then so on and so forth. If we open up, let's just say it gaps up. We're at 5104. You get resistance there. You look for the short, right? First target 48, second target 42. If we open up there and it starts going up, first target 55. So doing this at night, we can only use with the data we have. Do it in the morning, we get a little better data if there's some good pre-market volumes. So that's the levels to watch on Broadcom. DIX. Let me pull this over. Don't know why it's opening on the other screen. DIX, same thing. Nice strong pivot, or nice clear pivot. 97.41. And also here, guys, I gave you the charts. It shows you what it should move, right? Average true range, trading range, so $3.55. DIX, 97.41. Below that, looking for 95.62. Then 93.90, which is the 10-day. We could gap up, we could gap down. Remember, again, we open up near one of these levels. Could be S2, could be T1. That is your new pivot. Then you want, this would be T1, this would be T2, this would be S1, this would be S2, assuming we opened up here. In case any of you don't know, this just means it's the 10-month simple moving average. Okay? Try to trade the names I put on the list. Those are the movers. They're ready to rock and roll. What else did we do? Where the heck? Oh, I know what we did. Where did they go? Where's Mr. Visa? Visa. I think this is one of my favorite ones for tomorrow. I like all four. I think DIX might be easy to trade. Visa will be easier to trade. Obviously, Broadcom, bigger stock, a little harder to get into. Look at the Visa setup, guys. We're wedged. As long as we open up between this 208.71 and 208.30, you got the 100-day, you got the 21. Don't look at this because I'm on an hourly chart. This is the 21-day. Above this, want to take it long. Below these levels, want to take it short. Trading range, it's going to give you about 6 points. Right, so call it 202.50. Kind of brings you right to this weekly level. Upside, 214.50. I don't know if we're going to get that high because you're going to be crossing a lot of levels, including the 200-day. You got that 213.43. This will be a little easier one to trade. Also, watch that gap right here, guys. I put it on the sheet, but I didn't mark it on the chart. So just watch that little gap fill. That could be the resistance for the first upward move. Last but not least, Constellation Brands. This one really looks ready to move. Might be a multi-day move, might take a day or two. Watch that 246.07. Downside, we got the 10-day, 21-day, regular level, and then we got the 50-day. Upside, we break through this, we're filling this gap, and it should get past this gap and get to 251.63. I mean, obviously the market's been crazy, been doing nothing but pushing. If we get any kind of like 20-point gap up, I think you got to start looking to fade or at least take some profits. You could ride these day names that I'm giving you as long as you want, but this thing's going to pull back soon. Put call ratio is awfully low, closed awfully low, at lows it hasn't been in ages. So I would assume protection is going to start being put back on. All right, that was longer than 3 or 5 or whatever. It's 10 minutes. Hope this helps you guys. Let me know. If it does, I'll try to do these once a night. Now let me try to successfully post this for you guys. All right, if you need me, DM me tonight. DM me any charts you want me to do. I'll try to do them before I have to leave tomorrow morning. If not, have a good trading day, and I will speak to you guys tomorrow.